Tao in Chinese simply means the way. As a philosophy, it is to find balance and harmony with the universe. Welcome to the Tao of Chao podcast. This is a podcast about macroeconomics, geopolitics, global finance, investment themes, retirement planning, and behavioral finance, where we will try to find balance and provide a clearer path forward in this uncertain world. I'm Philip Chao, your host. Each episode, I will feature an industry guest, a person in the trenches, a practitioner, to discuss a relevant topic in which my guest has expert knowledge and wisdom. Hello, I'm pleased to introduce today's guest, Andrew Mattock, who is portfolio manager in Matthews Asia and manages the firm's China and China small companies strategies and co-manages the firm's Pacific Tiger and China Dividend strategies. Andrew holds a Bachelor of Business majoring in accounting from ACU. He began his career at PricewaterhouseCoopers and qualified as a chartered accountant. Andrew, thank you so much for being here.
Yeah, thanks for having me, Philip.
Thank you. And let me frame our discussion with a little bit of background, if you may. So according to The Economist magazine 2018 article, How the West Got China Wrong, it says that after the collapse of the Soviet Union, the West welcomed the big communist country next into the global economic order. Western leaders believe that giving China a stake in institutions such as the World Trade Organization, WTO, would bind it into the rules-based system set up after the Second World War. They hoped that economic integration would encourage China to evolve into a market economy, and that, as they grew wealthier, its people would come to yearn for democratic freedoms, rights, and the rule of law. This has not happened. Today, in the fresh third term of Xi Jinping, the US-led alliance framework has escalated further against the CCP. It is widely accepted that China and the US are engaged in a Cold War of sorts today, and China is now a strategic rival, a great power competitor, and a national security threat. Almost every month, a new initiative or oversight committee in Congress is proposed to focus on containing China politically, financially, technologically, militarily, and via trade, directly or via friendly nations. I cannot think of any more leads, that's why I stopped. On March 25th, 2021, President Biden said, China, and I quote, has an overall goal to become the leading country in the world, the wealthiest country in the world, and the most powerful country in the world. That's not going to happen on my watch because the United States is going to continue to grow. So today, the rhetoric has ratcheted up to framing the divide as democracy versus authoritarianism, which suggests an existential threat to the rule-based post-World War II order and institutions laid out by the West. On the other hand, Xi Jinping has taken a number of draconian domestic policy steps during the first 10 years in office. From crackdown on corruption, I can hardly say it, so corrupt, repressive treatment of Uyghurs in Xinjiang, heavy-handed policies to contain tech behemoths, choking off financial lifelines to residential real estate markets, cracking down on private after-school tutoring, limiting gaming for children, and the heavy-handed zero COVID policies. These and other actions have confused and alienated investors, and some are suggesting China, the second largest economy in the world, is now un-investable. Andrew, I appreciate your thoughts on how to interpret these actions by Xi and about investing in the post-COVID China in the near term while navigating the geopolitically challenged path in the long run. So Andrew, give us some of your thoughts.
Yeah, there's a lot there, Philip.
Yes.
Let me start, at the end if you want, and then we can sort of move forward. But I think one of the things that's striking to me, it doesn't get enough sort of attention, if you like, is really under Xi. There are criticisms, and we can go through that later. But really for me, looking at China since 1999, where it came from in terms of the type of investment that was put into the economy. In the end, the financial crisis, the overinvestment, the emergence of Xi 2012, and really where China had got itself to at that stage. There seemed to me to be, quite a big shift in terms of policy, a recognition that China had maybe overcooked things in the financial crisis in terms of the type of stimulus. Local government financial vehicle debt, if you remember, was the big term. Nobody really knew what it was. Mm-hmm. The micro reform agenda, if you just want to use that one word, in the last 10 years has, to me, been the evolution in terms of policy setting in China. As a country develops, it's harder. You can't just sort of build the road and build the rail and attract the foreign direct investment, get the export growth, and away you go. There's lots of nuances that need to be sort of unlocked within the domestic economy. And I think Xi's terms, if you want to put it like that, has really been about this micro reform agenda in China. You look at the start of it, you mentioned the anti-corruption drive, something that was essential. I remember reading the Chinese newspaper at the time when the number one job that university graduates wanted to do out of school was to become a government official. Yeah. You knew they sort of had a bit of a problem there. And that was the stimulus. That was the structure of the stimulus. That was the local government financial vehicle debt that hadn't been brought out into the open. And so they did create the local government bond market. At the time, there was no yield curve in China. So they had to create a treasury yield curve right down into a corporate yield curve, in addition to the local government financial vehicle debt. If you remember, at the time as well, there was the big thing about SOE reform, which Xi was commended for cracking on with, because a lot of the SOEs had become bloated. Again, their balance sheet has been way too extended. They'd overinvested in the wrong areas. All that type of behaviour, as well as the type of CEO that was in charge of them, needed to be restructured. All these things take time, but when you look at the micro reform agenda from there and the pace at which it's continued to gather pace, logistics costs in China, across China, were way too high. We've seen the emergence of really 5 or 6 big logistics companies trying to bring down the overall cost of logistics. Obviously, we saw 36,000 kilometres of high-speed rail to increase the connectivity, the movability of the labour force. Lots of reform when it comes to urbanisation, allowing people to have rights when they move into the cities without such long lags, encouraging the emergence of the new cities in China to develop, as well as these financial reforms. In terms of capital market reform, we're going through that at the moment. Healthcare reform, we're going through that at the moment. Then we come to sort of platform company reform, which, again, the big reaction in the last 18 months in terms of stock markets has been about the regulation of platform companies. But my point is, it's just a long laundry list, if you like, of micro reform, which, from my own personal perspective, I was happy to see it. Big bang stimuluses that led to 5-year cleanups. I was hoping that we would get rid of that, and we have. I mean, you look at fixed asset investment growth in the last 5 years, it's come down from 25-30% to 4.5-5. So, I think not enough attention's being put, because we are distracted by a lot of these other issues, geopolitically and whatever else. But, for me, micro reform is tough. It's tough in America. It's tough in China. It's tough anywhere, because it's piece by piece. There's no quick solution. It takes time to get results. It's not big bang. But it needs to be done, and so if we start there in terms of Xi and what he's managed to do, the word, again, the word in my mind is micro reform agenda.
So let's take that and put a more typical spin on that frame. Is, oh well, if you invest in anything in China, is basically you are partnering with the CCP, because CCP plays such a large role. Either you are talking about state-owned enterprises, or you are otherwise anything else. They are all part. They are all a member of the party. If you are successful, and so are we really investing with them, and are we in bed with them as a capitalist? We are. Is that something that is a reasonable frame, or you think that is just a overarching statement that doesn't translate to every circumstance during this micro? You know,
Again, certainly in old China before Xi, you could have sort of said we were more in line with that if you just looked at the composition of the stock market, what you could actually
yeah,
invest in. Steel
yeah,
companies, SOEs, cement companies, SOEs, banks, SOEs, telecommunications companies, SOEs. Um, before Xi, yeah, but those industries, those old industries, tended to be dominated by the old party actors, if you want to put it like that, the CCP,
yeah.
because that's where China had come from. As China's evolved from this fixed asset investment cycle-led growth into something that's broader, more consumption services orientated, what you are aligning yourself with now is really private businesses. I think Andy Rothman's got some fantastic charts for you in terms of number of employment in China that's private, 85%. The number of SMEs as a percent of the total economy. You can see really what you're aligning yourself with now is the new China, the consumption, the services side, and that's not dominated by SOEs. That's dominated by new companies. We can talk through the platform company regulation, but Now the government has, and it did say, even again back in 2012, that it was no longer going to play a part in the distribution of capital in China, but it was going to regulate. That was the big difference in terms of the way they spelt it out. So there's no doubt that the regulatory oversight of China in that what you would call middle income phase, $12,000 a person, has picked up. But regulation directed in the right manner is not bad regulation. Unfettered capitalism that has no boundaries to it. We can argue whether, to what degree.
Yeah.
But from my perspective, when you see regulation that's sensible, that's looking towards directing a more efficient allocation of resources domestically, then it's not necessarily all bad.
Actually, Xi talks about or reference what you just said during his 20th Party Congress speech in laying out the next 5 years. He talks a little bit about that as well. So, is it also not true that people are suggesting that the Communist Party is at least having a one board seat on many boards, public boards, to be part of a company? Is there any pushback on that from you or others, or should have pushback, or that is just rumor, is not true?
We get mixed messages on that in terms of the factual nature of it. The golden share, where essentially a member of the CCP is more or less aligned with just monitoring what's going on in the company, not necessarily involved in the company, but can understand how the company's working, particularly the bigger sectors that are very important.
Yeah.
Food delivery, there's really only 2 companies.
Yeah.
E-commerce is really only 3. Huge ways of, huge portions of the domestic economy are going through these big companies. So for the government to have an understanding of what company policy is, and where it's likely headed, because it will have an impact on consumer behavior, etc. I sense that's the rationale behind it, rather than involvement in the companies itself. The Chinese government has been caught behind in regulation, time after time. Again, local government financial vehicle debt, they were behind, and they had to clean it up, and it was a bit of a mess. Wealth management product regulation, they got caught behind badly, and had to clean that up in the 2015, stock market fiasco, if you want to call it that.
Yeah.
Right through 2018, it was a bit of an issue for them. Recently, consumer credit again caught behind because the economy, developing that quickly, you can not keep up, you can not make mistakes. So if the golden share issue or thing is really about understanding where the economy is headed, you don't really have a problem with it. Influencing companies for whatever alternative reason, I can't come up with one on the top of my head for why they would do it, then yeah, that wouldn't be great. But
it sounds like it's unclear. Sounds like it's
unclear at the moment.
unclear. Even though the premise may make sense. I mean, it's one of those things that people used to say that I would take a dictator any day if he or she rules with a velvet hand. But who is going to check that velvet hand? I guess is the question, right? So that's sort of one way to think about it. The other thing, go ahead.
You have to look at the track record of regulation. You can't just pick an isolated point and say, "Oh, bad guy." If you look at the industrialization process of China, let's just say in the last 25 years, obviously gone on all that, but has the track record of regulating, being pragmatic, overdoing things, self-correcting. Has that been a fluid process that's generally lent it onto the right path?
Andrew, you were talking about the past is no indication of the future.
Yeah.
And so share with us some more about your thoughts there.
I mean, I think the future, in terms of investing in China and understanding policy setting in China, is really, again, like if we take, poverty alleviation was the big thing that, I mean, nobody really cared about those terms that much. And they declared victory on that and moved on to common prosperity.
Yeah.
Then, we do get an overreaction in terms of the use of that term and what people interpret it as. I think it's a continuation of where they've come from. You don't come from a completely revolutionary market-led economy to then revert back to something else. I think that path is very, very clearly set. I think you will continue to see the government regulate where it sees excesses. I think, the distribution of income and wealth in China is important. It's a very, very large country. It's something that they're continually trying to address. Healthcare, education, reform. You've seen that they want people to have equal access, equal opportunity. They need to develop the hinterland very aggressively in terms of the consumption power and the base. All those trends are in place, but I think they also continue to require, again, a continuation of micro reform, on and on and on. So I think the path is more of the path future in the future is actually more of the past than reverting away from anything that's again big bang stimulus or excessive involvement of the government in setting prices, which is what we've come away from.
Would you agree that the view from the outsider, let's not call the West, but outsider thinks about, you look at China being the second largest economy and all this talk about how they brought 600 million or whatever number of people out of poverty and how well they are doing, and they are number one in this, and they are going to space. There's a lot of very well certainly advancement that is almost, think of it as a developed country, which it is not. Like you said, the average per capita income is 1/4 of what the U.S. is. We are not even a moderately prosperous country is where Xi Jinping talks about, and that's the middle class, and China is not even there yet. But yet, when we frame China, we think of it as it's like a Germany, or it's like a very well developed country, but it isn't. So I think they are caught in this. Some parts of it is way in advance, some parts are still way in behind, and this sort of process is very messy. And to your point, that back in the early 2000s, there was misallocation of capital, there was excessive spending or spending inappropriately, or anything goes and so on, which led to more corruption and so on, that it seems like what you're saying is that it needs to be controlled, it needs to be redirected in order for this economy not to collapse or the country to collapse. Is that what you are sharing? What is necessary change?
Yeah,
Or dialing back?
I mean, I think you're right. I think, again, people ask me what the biggest risk to China is going forward. What is the way forward? And I think execution on everything you've just mentioned. Urbanization rates, common prosperity in terms of expanding the lower consumption classes into being able to consume more, both goods and services. Access to healthcare that's national, which they're going through now. I mean, no one talks about the healthcare regulation, but
yes,
man, it's been very extensive. The challenge in executing on 1.3, 1.4 billion people, when it's vastly different in terms of stages of development, is a huge, gargantuan task.
Yes.
The preoccupation that people have with China, not understanding that the challenges it has from within, going through all these micro reform aspects that need to occur to build a moderately prosperous society, as they've termed is the goal.
Yeah.
I think that's the point. Now, there's any number of things you need to get right to execute that. There's property, healthcare, education, there's immigration reform. There's so many things that need to service sector businesses, small SMEs that need financing, but it's all cash lending. So how do you finance it when you're a traditional bank? How much should we lend into mortgages versus business creation? There's just so many different things that need to go right for you, but they're trying. My point is they're trying. It seems to me like they're trying to do the right things. Now, whether they execute and they get it right, only time will tell. But the challenge is there. It's a big challenge at $12,000-13,000 US per capita.
Yeah. So I'm going to turn a little bit in thinking about. There's a lot of criticism, right or wrong, of Xi being repeal this 2 terms rule. He has consolidated power. That's probably most often cited. He is emperor for life. All those things. And now the biggest danger, as observers from the West will say, is that nobody would dare say anything against what his ideas are. And that this isolation, in some ways, they think of it almost like an emperor who only want to hear what he wants to hear. On the other hand, I'm hearing the folks from Asia or ASEAN countries saying, no, that's not indeed the case. He has some of the smartest people surrounding him. He has a view, of course, and they want to execute on that view. Number one is consolidation and solidarity of the party, because it's with that party they are able to implement either micro or macro changes. And there's a directionality, and also they are gearing up for this great power competition, and they need to be steadfast about where they are headed and all stand together in a unified way. How do you think about those 2 very different views of what's going on in China? Only because one view tells me it's a lot of risk in investing in China, because if Xi wakes up with a pain on his left side, he's going to say, I'm going to fire you. I'm going to do this. I mean, the way that they talk about it, right, in certain angles. And the other is saying, this is fantastic, because we at least have a mission, a vision, and we're going to implement it. You may not like it, you may like it, but that is what they're going to do, and they tell you what they're going to do. What's your thought on that?
Yeah, I mean, Chinese politics is very hard to read, number one. Again, my read into, who's next in line, it's only as good as anybody else's reading, including yours. And that's after looking through it in 25 years. It's very hard to see the next line. So that would be my only comments on that. I would say that, solidarity, a 3rd term, was decided quite a long time ago, to tell you the
Yeah.
truth. They did have a corruption problem, a big one, a big corruption problem.
Yeah.
The way that corruption comes back is that the old regime steps out and the new one steps in too quick, and then you go back to the way it was. So, again, the foreign aspect of this, solidarity when it comes to geopolitics may have played another role in it, but there was also a domestic role when it came to corruption and having to do a mass clean out job domestically that maybe also was a reason or a rationale for why they thought they needed strong leadership domestically, because things had become so bad. I would tend to agree with you that it looks to me like it's more of, if you want a Singaporean model, insofar as the right types of people run the right types of ministry. It's gone away. Again, I'll reference Andy Rothman. He's got a piece in looking at the people that in the ministries, the CSRC, whatever it is, the home, in terms of migration, in terms of home ownership, all the Provident Fund, like they seem like they're the right qualified. They seem very qualified to be leading that division. Yeah. So to me, again, coming back to micro reform, very hard for Xi to be that smart. I doubt any one guy is that smart, because there's too much. Yeah. It's not big bang stuff. It's too everywhere, and so you have to have people that know what they're doing everywhere to be able to execute as well as they have. So I would err on giving them, again, a little bit more credit for what they've managed to achieve on that side of things, but then acknowledging, like with people, that it isn't as transparent as what we get with the election cycles here. It's on everyone's TV screen for well over a year. We get to hear all the debates, we get to hear all the candidates, we get to hear all their views. So understanding that people have also got a legitimate concern in terms of the transparency of what even I can see at a political level. On saying that, if China was a democracy and was operating under 4-year election terms, the question I would ask you, Philip, is would you actually invest? Because
no, not at all.
I'm not sure they get a whole lot done at this point.
No.
In that type of a political environment. Maybe democracy is a luxury of industrialization rather than a prerequisite for it. And they may move down that channel when the job's done, but they're a long way from when the job's done. So I'd prefer, from an investment point of view, for it to stay as it is. Along, again, with the Chinese people, they tend, security, continuity, again, knowing their own history, if that wasn't the CCP, then who would it be? Could we trust that person? Where would we end up? All these questions would have to come onto the table for you to want an alternative to what they've got.
It's all about stability. I think stability reigns supreme in Chinese culture.
I think it's a big thing.
There's a very big deal, and I think that the people who are less familiar with Chinese and Chinese culture, they don't quite understand. And part of the stability is collectivism and not purely individualism. And I think the Western frame try to impose, and to some extent rightfully so, that everyone has a right to free speech, and all the things that we come to enjoy, we take it for granted sometimes. But I think that giving that dosage is probably not quite ready for a culture that has not been enjoying that type of freedom and really hold dear stability, predictability, and collectivism, which is a very different model than the Western liberal democracy model. Let me ask you. Go ahead.
No, just to execute on economic reform, investing in companies and that type of thing. I think also, we benefit, looking at these companies, because this micro reform agenda is so intense everywhere that it's very hard to execute that type of thing with 4-year election cycles.
Yeah.
When, there's so much to be done.
And you need a long view, because this is not done over any short-term period of time. And you need to have consistency to the extent that one can in policy and directionality and commitment. until you get it done, and you just can't do it in a 4-year election cycle. I mean, I think it's extremely challenging. Let me ask you on the struggle between the central party, we call it federal government here, vis-a-vis the local government, which is the provincial government in the state or what have you. There seems to be sometimes a disconnect. On the one hand, when the CCP, when the central government says, "I want you to do this," sometimes they don't listen quite the same way, or they implement it not quite the same way, or they go overboard to want to make sure that the decision makers on the lower level don't offend the upper level, and they end up losing their job and they don't get promotion and so on. How much of that you think is creating really an uneven playing field, and that how the West or the non-Chinese want certain things, and the central government said, yeah, that's true, but when it comes to implementation, again, on the micro level, it's not much more difficult because they really don't have a hold and a lock on every single province and every single municipality.
No, I think again, the communication that's come out when it's come to recent reform, and this is not just between local government in terms of implementation of, say, property measures, what they intended, what they got, or just the cyber police, if you want to call them, implementing something around platform company regulation, and so it does get a little messy between, again, what's intended and the way it's communicated, how the market has then interpreted, and then there's a bit of then they realize the mistake, and then they have to sort of recalibrate things or recommunicate, which I think you've seen when it comes to the platform company regulation recently. Like, they're trying to reassure people that they're not anti-market. It was intended to pull in the irrational expansion of capital. It wasn't intended to destroy private business. So, yeah, you're 100% right. It does get messy. You have to look at, okay, what was the common sense outcome of that regulation that they were trying to achieve, and sort of read through the misinterpretation sometimes that the market sort of jumps to in terms of, we heard China's un-investable. They don't like private businesses anymore. It's like, oh, hold on a second. I don't know how that's that
connect.
was a reasonable assumption in terms of where she's come from with all this reform, that he's put in place, to then pull it all out again. That didn't seem like a realistic interpretation. On saying that, definitely messy, and would agree with you 100% that communication could be better there. Local government, central government, and also ministry reform versus intended reform.
I'm going to switch a little bit to come back to you to think about investment more directly. So far, we have talked about really more background, more macro, and how one can take all that somewhat confusing, actually, opaque and confusing environment, but yet obviously there are opportunities, right? The opportunities in the old days is a less efficient market is through information, right? That's the old game that all of us know about. So let me turn to the 20th Communist Party Congress in October. In his opening speech, he listed a list of aspirational initiatives or continuation of what he's doing, like you said, micro reforms. And here are just 7 I'm going to just quickly mention, and I would love to hear your thought on. Are they investment themes? Are they things that help to inform you to say, maybe that's an area that I need to observe and kick the tires of companies that participate in those? So let me just quickly read them off to you, Andrew, and love to hear your thoughts on it. One is more self-reliance, especially in areas related to the fourth industrial revolution. I put that term in, fourth industrial revolution, which is basically we're talking about IT and all the computer and all the future and all the all that type of stuff. Number 2 is food security. Number 3, more focus and emphasis on entrepreneurial, small and mid-sized companies. Right up your alley here. Much more on military spending. Also, of course, have to do with tech, from human to hardware to training. Number 5, emphasis on tradition and vocational education, but not test taking, which has been consistent. Common prosperity, that's a theme that you already said is the logical next step from bringing people out of poverty. Common prosperity remains front and center and balance city and rural and developed and less developed portions of China. And then finally, more internalization of the renminbi, RMB, the Chinese currency. So do these inform you of industry sectors, directionalities I mentioned earlier, and names that you may want to say, thank God he gave us a roadmap. Every 5 years, I love China. Every 5 years, they give us a roadmap, and we're just going to go after that roadmap, and we're going to make lots of money. What did I say wrong? What did I say wrong?
Well, it's becoming more nuanced in terms of there's so many different areas that come into play now as the economy develops more. You're also creating more and more problems or more areas of potential focus. So whereas before fixed asset investment, it's a big thing, but it's really only road, rail, and port. Okay, that's fine. There's 3 things. When you go into domestic consumption, you then bring in how many categories of domestic consumption?
Yes.
Domestic services, how many categories of domestic services? Because not one of them will dominate. So it's almost the roadmap does give you things to invest in. I think vocational education is a big one because SME businesses need trained particular workers. You can see how they relate together because you need the right type of person. You don't necessarily need university graduates everywhere, but you need people with certain vocational skills that are very important to certain strands of small, medium-sized businesses. Then you need sort of the infrastructure for SMEs. The first point you mentioned, IT, the Internet of Things. These SMEs would benefit hugely or a lot further with more software that was catered to order flow and managing working capital cycles. That's where sort of software and hardware interrelate to the SME, to the vocational education. But you can see, just in that example, how things become very complicated the more complicated your economy becomes.
Yes.
So the roadmap that we used to have to be able to invest in China is maybe not as clear cut. But certainly, again, I think, you've pointed out, 7 things there that are front and center of what they're trying to achieve.
So when you think about all this, seems to tell us very clearly that active management is the way to go because you can't just bet on an index because who knows? You need to really do a lot more homework. You need to really understand the trends. I know that's almost like a feed you a ball to hit on, but you are active manager, but I really believe that in this inefficient marketplace where information and your viewpoint or a manager's viewpoint and able to execute on it is critical.
Yeah, and the thing about the Chinese stock market, it's probably, of course I'm biased. I do Chinese equities, but it's interesting because it is the supply chain of the world, and all the companies within that supply chain are listed, in the A-share market. So if you just look at Shanghai, Shenzhen, 2,500 companies, over $1 billion market cap. If you look at the composition of that, there's 500 industrial stocks, there's 400 material stocks, and there's another 500 IT or IT related. That's hardware and software. So between those 3 sectors, industrials, materials, and IT, which tend to be more involved in the supply chain, not just domestically but globally, that's 1,400 companies that give you a read on some little bit part piece that may exist in any type of consumer goods, service, or product that we're used to seeing anywhere. From a solar panel to anything that's in Walmart to whatever it is, an EV car, battery materials. So it's a very interesting stock market, but it's extremely complex because of what China is. China's involved in the global manufacturing center of the world, and everything involved in that manufacturing center just so happens to be listed in China. Yes. Plus, you get all the front-facing consumer companies, that we know about, the platform companies, the payment system companies, you name it. So, in some ways, the complexity of the Chinese stock market is because of what it is, the center of manufacturing, plus everything else. And then you have this anomaly, like this massive anomaly of, Chinese investors not really being able to have free and open access to things that are listed in Hong Kong and the US market, and which generally priced by overseas investors, not by mainland Chinese. Yet things in Shanghai and Shenzhen are generally priced by mainland Chinese. So it's a market also that's complex in terms of capital market reform, just another reform agenda. But in terms of giving people access to bonds and equities and wealth management products and money market funds, they're trialing out 501k plans at the moment, or 401k plans at the moment. In a couple of provinces. Even the structure of the stock market itself and the bond market is still not as easy as you would imagine, beyond the type of company that I've just mentioned that's listed on the exchanges, which is complex because of what China is as well.
So, two other really quick. I know there's so much to talk about. All of a sudden, in the last 6 months or so, maybe I'm just paying more attention to it. That this, because they published that the demographics that is aging a little bit faster than anticipated. I mean, it's like the end of the world. I mean, everybody's talking about it. It's like, oh, well, that's it. That's the end of China. They're aging so fast and blah, 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 and on and on and on. And one thing about demographics, we would anticipate within a small deviation, we knew that. This is nothing new. Or is it something new that in your mind, you talked about vocational training and talking about, the directionality of where China wants to go. And do we have a real challenge in China about labor and labor availability? And if they do not have the labor because of demographics, it's not a sudden realization. This is something that's been going on ever since one-child policy. We already know that one day this is going to happen. We can plot it easily, but yet people are making a very big thing about it. What's your thought? Would robotics come in? Would they try to take part of the Japanese model? Or really, we're fewer people, that's fine. We can still be extremely productive by bringing artificial intelligence and all that type of stuff. What's your thought on that piece?
Yeah, I think it's more of a medium long-term issue. I think, going off the top of my head here, but I think 2035 is when the labour force sort of tops itself out in terms of participants. So, even from now to then, it's quite a way forward. And then you've got an economy that's, again, 12,000, 13,000 a person. So there's a lot of, productivity left. The savings rate in China, exorbitantly high. Another challenge they have is trying to bring that down. But there's a lot of savings to be unlocked. There's a lot of productivity to be unlocked. There's a lot of the hinterland in China to be unlocked that can offset some of these negative decay elements when it comes to demographics as well. And then obviously they're putting policies in place today to encourage the birth rate.
Yes.
So then in 15 or 20 years, it may be not the same sort of problem. So it is a medium to long-term problem. I don't think people should be investing on that one today.
Yeah.
Demographics doesn't hit you tomorrow. And the rate of decline that China's going to go through makes it a more medium, longer-term scenario from this stage of development. So I wouldn't want to overplay that one, really.
Okay. I think our time is almost up. So Andrew, I there's so much more to cover. What are as we leave today's conversation, what are probably 3 ideas that you may want to leave us in saying investing in China in 2023 forward? Certainly to me, I think volatility, and you didn't use that word, but volatility comes from uncertainty. And there seems to be uncertainty, but then every market there's uncertainty. So I'd love to hear your thoughts on maybe 3 things that you want to leave us to think about. Based on our conversation. Yeah.
I mean, from a stock market perspective, I think it's just important to understand that the Chinese economy and the stock market itself is a reflection of the fact that it is that, it's a center of, so, global growth is important to China because of what it is. It's less important because it's got its own domestic drivers, but than it was 10 years ago, but it's still really important. And when you look at China, it's not just a China view. You've got to have in mind all these things that China needs to get right, and they would also they would like to see the rest of the world go right. The US had China to outsource to. China needs also someone to outsource to eventually. So that's where sort of things like Belt and Road Initiative, this supply chain orientation that it has in its domestic stock market, is going to need to be outsourced eventually. So all these things, I think, are important to China from an execution point of view. It's interesting in terms of where its successes come from, and the next stage. There's a lot of challenges. They're more domestic in nature. I think, like I said, there's so much they need to execute on that's harder than even where they've come from, that they're aware of. But I do think from a policy setting point of view, they understand the challenges that they're up against. And I think it is, you mentioned Japan, I think it is understanding, where they could avoid some of the Japanese pitfalls, looking at other countries. That's important to them to understand as well. So I think from a policy setting point of view, I know a lot's been said about Xi. But, we have to also look at the positives as well as the negatives in terms of understanding Chinese politics. But understanding that policy setting is actually being pretty proactive in the right direction. So, I would say to people, those couple of things, there's opportunity, there's opportunity, there's more to come in the future, but there's also execution and policy setting that needs to go along with it. And it's not a simple story.
But is it fair to suggest that you're inferring the upside is worth the uncertainty? In other words, if not, we wouldn't be doing this at all. So that's caveated not just on a Chinese view. It's Chinese companies. Again, it's important to be able to invest in Chinese companies, in their own right. But understanding that China is the center of manufacturing in the world, and the rest of the world's actually important and reflected in the Chinese stock market because of the nature of the beast, if you want to put it like that. Industrials, materials, IT, etc. So, it's not just a view on China. That's all very well and good. But I think, the Chinese would like to see things moving in the right direction globally as well. And at the moment, that's a bit of an overhang. So, just have that in the back of your mind as well. Yeah. In terms of where you're investing in China. So, Andrew, I have not only enjoyed our time together, but really learned a different framework in thinking. The things that you talk about. You're a man on the ground. You're connected to all these things, and it's important that we don't just take a single view. It's a very complex system. It's a very complex world about investing in China. So thank you very much for sharing your nuanced insights and experience with us. And we hope that we will have the privilege of spending time with you again, maybe next time talking about supply chain and the regionalization and the possible reversal of globalization for the foreseeable future. But in the meantime, I will look to you to give us more wisdom as next time when we get to see each other again and talk and learn more. So thank you very much.
No worries. Thanks for your time. Thanks.
You can always find more episodes by visiting philipchow.us/podcast or find us on your favorite podcast app. You can always leave us feedback, ask questions, or request a topic for us to discuss by sending an email to pc@philipchow.us.
Views expressed in the Tao of Chao podcast are individual opinions, and they do not represent the employers of each guest or the firm each guest is associated. Our podcasts are for educational and informational purposes only and should not be deemed or viewed as investment advice or recommendations. Please consult your personal financial advisor, investment expert, or investment fiduciary before taking any actions about your plan and investments.